Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hello, and welcome to the April 5th edition of Basis Loaded with Joe Schmit. I am Joe Schmit, and this episode is produced, as always, by Paige Dreskel. And what we do here is break down the latest NDPSR report, starting with butter. This butter number coming in at 242.38 represents a plus 4.5 to the CME 1 week average of 237.80, so higher than normal basis in butter. It's kind of something that we're growing accustomed to. A little bit different on this report. For the second week in a row, NDPSR volume falling below the expected 3.5 million pound level. So a nice price for the manufacturer. However, at that elevated level, having a little bit of difficulty moving product. And in cheese blocks, 198.81. That represents a plus 6 to the CME 1 week average of 192.90. We traded 13 loads on the exchange that week. And that was a week where the CME gained 9 cents. Here on the NDPSR, just a little bit over 7-cent gain. So some of those gains at the CME not reflected here on the NDPSR. However, plus 6, that's higher than expected basis. And on that elevated level, once again, lower than expected volume, short of 12 million and even further short of our expected 12.5 million pound volume. So again, same as in butter, blocks printing a nice price here relative to the CME weekly average. However, at that elevated level, volume a little bit limited. And then in the barrel, 190.84. That represents a minus a half basis to the CME 2 week average of 191.37. So we traded 27 loads on the CME average per week over the course of the 2 weeks that I used to come up with that 191.37 average. The CME 2 week average was up 12.5 cents here in the NDPSR, getting close to that same 12-cent gain, coming in at about 11.5 cents higher. So the prices that we're seeing at the CME translating over to the NDPSR, however, that negative 1 basis is about 6 cents under what we would expect in a typical NDPSR CME relationship. And volume at that lower basis level, lower than expected, coming in pretty nice, north of 14.5 million pounds and well above our 13.5 expected volume. So lower than expected basis in the barrel and higher than expected volume. And what's interesting, if you take the 1 week block average and the 2 week barrel average, it is basically a 1 cent block barrel spread on the CME averages. Here on the NDPSR, because of that elevated block basis, you have almost an 8-cent block barrel spread on the NDPSR. So something interesting to keep an eye on into the future. And then here's the real surprise on this report, whey, 45.33. Now that's essentially a flat basis to the CME 1 week average, where we traded 3 loads on the CME. However, on whey, we're always looking back to the March 18th NDPSR number of, let's call it 41.97, let's call it 42. So just a massive jump in price here, almost a 3 1/3 cent jump over prior week's NDPSR. So the manufacturer was able to once again print a very nice price. However, as the theme is on this week's report, volume suffered, failing to make the 4.5 million expected volume threshold and falling even short of 4.3 million. So just a massive jump in whey price. However, it looks like the outsized volume that we experienced in prior weeks has run its course. And then lastly, non-fat, 114.74. Nope, that is not an April Fool's joke. That is a minus 3 basis to the CME 1 week average of 118.05. and down more than 7 cents from prior week's NDPSR. So the manufacturer had to discount in order to sell product, and then bam, look at that volume. Sell product, they did, north of 40 million pounds. Everything is on sale in non-fat. So this is week 5 of 5 for the March pricing cycle. This does it for March. Good riddance as far as I'm concerned. This has been a crazy one. My initial prediction for March Class 3 was 17 quarter. This is prior to a 40-cent cheese rally during pricing, and we end up with increase not only in cheese but also in whey, with a Class 3 expiration of 18.10, 5 cents higher than yesterday's final settlement for Class 3, and certainly a surprise to those who have been trading in this market lately. Class 4 coming in at 18.38, so we still have a little bit of a premium in Class 4 over Class 3 in March. If you carry current CME equivalents out through the remainder of the 4-week April pricing cycle, currently getting April Class 3 18.80, with April Class 4 at 18.32. So if all things hold as they are today on the CME, we will have Class 3 over Class 4 for the first time in a long time for the April pricing period. What's interesting is that April at 18.80, you have a futures discount in both the April and May contracts. It'll be interesting to see how things shake out into the future. Until next week, I am Joe on behalf of Paige and the entire Ever Ag Insights team. Thanks so much. Talk soon. Bye.